Let's break those numbers down now with Martin Smith from eNCA Capital. Martin, it looks like we're going into the Easter weekend on a good footing, given the performance on the local bourse this afternoon.
Absolutely. We started the new quarter off like we finished the last one, and that's extremely strong. We've seen Naspers, well, most of the gains were around Naspers and Process on the back of what we sort of Tencent, as well as gold stocks also picking their heads up. So overall, quite a positive day and quite a positive start to the new quarter.
Right, and what about the global catalysts here? And I'm talking about that infrastructure spend that's been announced by the Biden administration, that having a positive effect on global markets. And I'm sure some of that positivity filtered into emerging markets like ours.
Absolutely, and I think it kind of continues the theme that we've seen play out over the last, call it year, where it shows that governments both in the States as well as in the Eurozone are quite supportive in terms of monetary and fiscal kind of policy. So again, $2 trillion worth of infrastructure coming through from Biden as announced yesterday. So going to be very positive, probably more positive for kind of cyclical stocks than tech, although we did see tech rally quite hard yesterday as well as in today's session. But overall, very positive. And like I've said on the show the last kind of 4 or 5 months, I think there's a lot of tailwinds that are coming through and a lot of kind of supportive of government. So I think the music keeps playing for markets.
Right. I mean, you mentioned this very briefly when you spoke about overall JSE performance, but just some more detail on Naspers and this over 5.5% rally that we've seen this afternoon. You did say tech stocks doing rather well, and this is a global phenomenon, I think. But just break that down for us.
So there's a couple of things here. It's not a very straightforward answer, but we saw Tencent up very, very strongly in the session today. And a little bit of news out of Tencent is they've got a fintech business that they're back, which had a very successful IPO, raising about $1 billion. But added to that, you've seen the Chinese tech stocks come up quite a lot on the back of the theme of regulation in China. So tech stocks in China sold quite aggressively, and they've been looking quite cheap for a while. And we've obviously seen a bounce in the kind of tech sector globally in the last couple of days. So I think it's a little bit of, like I said, looking a little bit too cheap. Tech kind of coming back in favor, as well as that news out of their fintech-based IPO. So a couple of things, but ultimately quite positive for Naspers.
Right, another company, this I thought was quite interesting, Quilter, announcing that it's going to be getting rid of its international business to focus on doing business for the wealthier clients that it's got in the UK.
Yes, so they're going to be selling Quilter International for about £483 million. It's something they've been looking to do for a little while. I think it's kind of in line with the group's strategy of getting rid of non-core assets and just trying to expand their margin and focus on kind of the parts of their business that are growing quite well. And I think that's something that they're looking to do over the next little while, boost their rating a little bit in terms of the multiple they trade on, because they are looking quite cheap relative to their peers, as well as their margins are also quite low relative to their peers. So they're just trying to kind of streamline the business. So ultimately, I think this is a massive positive, and Quilter's the stuff that I really like.
And then another company, Martin, South 32, it's saying that it's agreed to a payment for its SA coal assets, also agreeing to spend just over $2 billion, or just under $3 billion rather, on rehabilitating its mine.
Yes, so I mean, this is a theme that we've seen play out across the sector, where a lot of the companies are trying to exit SA coal kind of operations, just because of the multiple it attracts and the kind of fashionableness of it. So they're achieving what they want to do, is to get out of all that kind of exposure. Ceriti are coming in and they're going to take over those assets, and they're hoping to kind of extract value where maybe South 32 thought that they couldn't. So I think net, I think it achieves what both parties want to, and Ceriti is now going to be the largest supplier of coal to Eskom in South Africa. So again, it's going to be interesting to see how that plays out. But South 32 isn't really my preferred pick in the sector. Like I've said a couple of times, Sibanye-Stillwater is kind of my call at the moment.
Right, and then a final one for you, Martin. I'd love to ask about the local unit. It's doing very well. Despite this, we're going to be getting a hefty petrol price increase because of the price of oil. But just your outlook on the local unit and what you're seeing happening in terms of catalysts that could affect its performance.
So what we need to also look at is not just South African isolation, but also in kind of a global context. And globally, we're still looking very cheap. And we've already seen the kind of rotation out of your big growth stocks into more cyclical stocks, stocks with more value. And I think that can spill over into emerging markets. And South Africa is looking cheap relative to the rest of the world. So I'm hoping as the world returns to normal and money needs to find a home and people's risk or investors' risk appetite increases, that South Africa and other emerging markets will benefit from that. Because again, we are looking cheap and hopefully we see a continued bounce.
Hopefully we do indeed. Martin Smith from eNCA Capital giving us a wrap of the Markets Day. So